Good morning, everyone. This is Jim Dobler with DMI, and we are here for another episode of Secrets in Retirement Income Planning. Good morning, Susan. How are you?
Good morning, Jim. I'm well. How are you?
Excellent. I see that you have absolutely gone overboard as usual and dressed up for our little live chat right now, where I think next time we do it in 2 weeks, I may have to put a suit on, just because I can't let you outdo me. But so what I wanted to do today is talk about something that I've been getting some feedback in the industry is what your specialty is, Susan, reverse mortgages. So other than, we used to, for clients, they used to see the older gentleman from Law and Order who I guess has passed away, and now we see Thomas Magnum on there, Tom Selleck, who talks about reverse mortgages on the TV. But a lot of people don't understand how they work, the nuances of it. So if we could, for a couple minutes, can you just go into, since I know that's your specialty, go into reverse mortgages, how they work, and we'll see where the conversation leads.
Sure, I would love to. It's one of my favorite subjects. So let's talk about the home equity conversion mortgage, which is a HECM. That's available to people 62 and older, and it's insured by FHA. With a reverse mortgage, that's eligible to people 60 and older, and it's typically a proprietary jumbo product. Both products allow the borrower to tap into a portion of the equity in their home. So it allows them the flexibility to have cash, right? To help pay day-to-day expenses, do home modifications so that they can age in place, pay for long-term care needs, pay for healthcare costs. They can do whatever they want with the money. It's their money, it's their equity. So it gives them that flexibility. And as we say, my team and I say, is that we empower retirees to live a financially stress-free retirement. So that's the best part of our job. We really do help people financially through their retirement.
Okay, Susan, let me ask you this, and you may have just touched on it. Are the funds that they can take out in a reverse mortgage, are they tax-free?
They are tax-free, but we do say speak to a tax advisor. It's not income, it's a mortgage. It's a debt that they have to pay back, so it's not income. So there are different ways that they can receive the money that's available to them. With a HECM, they can receive it as a monthly payment, a line of credit, an initial draw, or a combination of those. So let's say, for instance, they know they need $1,000 a month to help supplement their current income. Or maybe, they have a husband and wife both on Social Security and one of the spouses passes away. So they need to supplement the income so they can get a monthly payment. A lot of people are putting it in the line of credit option because with the line of credit, it actually has a growth feature. So it's not free growth, but whatever's in that line of credit balance grows each month, each year. So it gives them access to more funds. The greatest part about the HECM is regardless of how they decide to take the money at closing, they can change their payment plan at any time, as often as they need to, and the servicer will just charge a $20 change fee. So it's so flexible because as they age, their needs are different, their goals are different. So it gives them that flexibility. I don't know any other program that does that, so I think that's pretty cool that it goes with your lifestyle and your goals and your needs throughout retirement.
Absolutely. And I think the flexibility is so key nowadays with everything happening so fast, especially in retirement. Now, Susan, I sit down with both financial advisors, insurance agents, as well as their clients. And it seems that the universal question that always comes up is, if I take out a reverse mortgage, am I going to lose my home? Can you answer that?
We hear that all the time. It's like the bank is going to take my home. What are you going to do when I die? It's a mortgage lien, just like a regular mortgage lien. The borrower still retains title to the property when they either move out, sell the property, or pass away. Typically, the house is sold. What is owed on the reverse mortgage or the HECM is paid off, and then the heirs will take the remaining funds of what's available. So it's just a mortgage lien, just like a regular mortgage.
Okay. So let me make sure I understand this. So if they take out a reverse mortgage, have the flexibility, which we both agree is very important, that they can pay it back and get rid of the reverse mortgage, or when they pass away, their heirs have a choice. They could either pay the reverse mortgage off, or they can sell the house. The reverse mortgage company would take whatever the balance is, and then the beneficiaries would get whatever's left. Is that correct?
Correct, correct.
Okay, because that does clear up a lot of the questions, like I said, that I get. So then here's a question for you. How does the reverse mortgage company, do they just take a tiny slice off the top? And the reason why I asked this, I remember 20, 30 years ago, people used to say, well, if you take a reverse mortgage, half the money is going to the reverse mortgage company and half is going to you.
Yeah, so years ago, reverse mortgages actually have been around since 1961. The first one was done in Portland, Maine. A small local bank gave a reverse mortgage to his high school football coach's widow. So that was the first one on record in the US. It became a pilot program in FHA in 1989 and then became permanent in 98. So they operated a little differently then. The HECM and the reverse mortgage today are very highly regulated. They have many safeguards in place for the consumer and the estate. So it really is a safe product today. So everything that we know about from years ago, disregard. So what happens is you're not making a mortgage payment like you do on a regular mortgage. So the investor gets paid when the mortgage gets paid off, when the reverse mortgage gets paid off. So obviously that interest is accruing. So that's when they get paid, when that mortgage is paid off.
Okay, so it's not like if you take out a $50,000 reverse mortgage, the reverse mortgage company is getting $30, $40, or $50,000 in fees, correct?
Right. That was called shared appreciation from many years ago. So the HECM today and the reverse mortgage today do not have that feature, which is to me a good thing.
Well, I would say that's probably a good thing. And I'll tell you what, just listening to having someone explain it, and someone explain it who's been doing it for a while now, makes it so much easier for both a person like myself, a financial advisor, and the end client understand it better. So I do appreciate you going into more detail about how they do work. With that said, we are about 9 or 10 minutes in, and we always like to leave a little bit of time for questions. So let me ask our crack producer, Lauren. Lauren, do we have any questions from the audience?
Yes, we do. So the first one is, can you purchase a home with a HECM?
Oh, great question. Yes, we do have a HECM for purchase product and a reverse mortgage for purchase product. So the nice thing about that, typically it's when someone is, we call it right sizing. They might be going from a 2-story home to a 1-level home, easier maintenance, whatever the case may be, closer to the children or grandchildren. So they would sell their current primary residence, use a portion of that for the new purchase of their new primary residence, and then the reverse mortgage would take the rest of that. So they have no mortgage payment. They are still responsible for taxes and insurance, but they'll end up saving some of the money that they make from their current home. For example, let's say they sold their home for $400,000 and they net $400,000, and they're going to buy a home for $400,000. Well, they could do that cash, great, but then they just used up all that money. Well, we can, just as an example, they could put $200,000 down. We can give them a HECM or a reverse mortgage for $200,000, and they have $200,000 that they can use towards the rest of their retirement. So that's money, freeing up money to make their lives that much easier. And again, they don't have a mortgage payment. They just have to pay taxes and insurance. So it's becoming very popular, and financial planners actually like it because it helps them help their clients prepare for like long-term care needs and stuff like that, because we're living longer, we didn't save enough. So it frees up that cash for them to be able to live a better retirement. Great question.
Wow. Great explanation. So that would be using a reverse mortgage in a little bit different type of way than what a lot of people think. A lot of people think correct me if I'm wrong, a reverse mortgage is more when you need money because you don't have any. What you just described from that really good question is more of a strategy to use in retirement. Again, like you said, whether it's to be closer to the kids or for whatever reason. Very interesting.
And that's a
Lauren,
great point too. That's a great point, Jim. It used to be used as the loan of last resort, and it's not being used like that anymore. So financial planners are jumping on board and looking at housing wealth. Borrowers themselves are looking at it. So it's totally, it's totally different today for sure.
Very nice. Lauren, I think we have time for one more question. Are there any others?
Yes, there is a few more. How do I know how much I can qualify for?
Great question. So based on your age, the property value, and the interest rate, those three factors determine what you're eligible for. And we can run those numbers in a matter of seconds. So reach out to us.
Very nice. Well, it's 12 after the hour, and we always like to say that we want to just have a quick live chat where we're not doing the full 1 hour podcast, so we keep everyone engaged. So I think we're running up to the end. I think this is one of the most informative live chats that we've had. So I really appreciate you bringing the knowledge. Lauren, you bring in the questions. So is there anything else you want to add, Susan, before we sign off today?
Contact me to learn more. It's a great product and a choice that you should be familiar with.
Excellent. Well, Lauren, Susan, another one in the books. Appreciate it. And I will try, if I remember, in 2 weeks at our next live chat to be a little bit more dressed up. So everyone, we appreciate it. And thanks for listening and tuning in.
Have a great day.